Hello, everyone. Thank you for joining us today for our financial scoop. Today's session is how to finance your undergrad degree. Today, I'm joined by Migdalia Gomez, the EVP of Community Engagement, and my name is Terrence Bazil. I'm a Community Engagement Specialist with HUECU, and I'm so glad to be here. I have some great presenters that will be joining me and telling us all about how to finance your education. So for today's webinar, we have reduced all background noise. We've muted all attendees. So if anything is going on, please feel free to enjoy the webinar. We don't worry about kids or dogs barking. We've taken care of all that. If you have any questions throughout the presentation, please use the Q&A feature. The chat has been disabled, and it makes this a bit more easier for us to tailor the presentation and get the information answered as soon as possible. Also, this presentation will be recorded and posted to our YouTube channel at MyHUECU to rewatch at any point in time. Also, at the end of this presentation, there will be a survey that we ask that you please take it to let us know how we did and how we can improve in the future. Also, just because we like you and as a thank you for joining this presentation, we have some raffles going on. You can see on the screen right now, there's 1 of 3 prizes, $100 deposited into your HU savings account, an ice cream gift card, or some HU ECU swag. You've automatically been entered in for a raffle. If you do win, please be on the lookout for an email from me. And it's not spam. We want to give you some great stuff. A little bit about the credit union and who we are, in case you're not familiar. We are Harvard University Employees Credit Union, a not-for-profit banking for the Harvard community. We are completely community focused in terms of our volunteer events and what we do, and we exclusively serve the Harvard community. We offer great products and services, and because we're not-for-profit, any revenue that we do earn, we give back to our membership in the form of free resources, such as the presentation that you're watching right now, and or savings, higher interest rates on savings and lower interest rates on loans, as well as we are accessible anywhere. And once a member, always a member. Once you join, you are a member for life. Today's session will be the financial scoop. Please be mindful of our upcoming session on Wednesday, estate planning. You can join and learn more at huecu.org/financial scoop. Without further ado, I'd like to introduce today's panelists, Mel Martinez, our Loan Servicing and Support Supervisor, and Raphael Dowie, our Educational Lending Program Supervisor. Thank you for joining us today.
No problem. Thank you for having us.
Thank you. All right, so let's get started. The first product we want to talk about today is our undergraduate loan. HUECU's undergraduate loan is designed specifically for students who are enrolled at least half-time and pursuing an associate or bachelor's degree at an eligible not-for-profit school. Students can borrow funds to cover tuition, books, supplies, living expenses, basically anything that falls under the cost of attendance. So this means students can use these funds towards housing, food, transportation, even to purchase a laptop, anything like that. Students are eligible to borrow funds in the amount of up to $35,000 annually and up to $140,000 throughout the course of their degree. The Financial Aid Office provides the final approval for the undergraduate loan through a process called loan certification. Once the loan is certified by the school, funds are dispersed directly to the student's school, and this is according to the school's instructions. If there happens to be any sort of refund available after the loan is, after tuition and fees are paid, any refunds would be issued from your school's financial aid office directly. So for the undergraduate student loan, the loan is in the student's name. It's also important to note that while undergraduate students are eligible to borrow this loan on their own, most undergraduate students have limited credit history, and that can make it difficult to be approved on their own. So applying with a creditworthy cosigner may improve the chances of loan approval for the traditional undergraduate students who may have limited credit history. Also, applying with a creditworthy cosigner can help the student qualify for a lower interest rate. So definitely something to keep in mind when applying. For the undergraduate loan, HUECU offers a graduation cash benefit, which is really neat because once a student graduates, they can reach out to us and let us know they've graduated, and the student can receive a percentage of the principal balance back as a cash benefit for graduating. And so students would just reach out to us to request the benefit and provide proof of graduation for this. As far as repayment, we offer flexible repayment options for the undergraduate loan. So we offer fixed rates, and we offer 7, 10, and 15-year term options. Also, students have the ability to choose between deferred or interest-only repayment plans. So that means that students can choose to defer their payments while they're enrolled in school and during the 6-month grace period, or they can choose to make interest-only payments while they're enrolled and during the grace period to help reduce the total cost of the loan. The grace period for the undergraduate loan is 6 months.
Oh, Mel, I believe you're on mute.
I am sorry about that. So just moving into our parent loan. Our parent loan is a great option to help our undergraduate student or help your undergraduate student cover their education-related expenses. And although it is called a parent loan, it does extend beyond just the mom or dad being the borrower. So this means grandparents, siblings, or other family members can also apply for a parent loan as long as the student is pursuing an undergraduate degree, in addition to meeting some other credit requirements. We offer a 10 and 15-year loan term option for our parent loan, with an annual loan limit of $50,000 and $200,000 over the course of the student's studies. And then lastly, this is an immediate repayment loan, which means there is no grace period associated with it, and full payments towards interest and principal will begin 1 month after the first disbursement.
Sorry about that. Okay, the next product we'll be discussing is our Flex Graduate Loan. The Flex Graduate Loan is HUECU's newest education loan product. So this product was created with the mindset that there isn't just one path towards graduate studies. While some students go directly into graduate school from their undergraduate degree, others may go back to school after starting a full-time job or later in their careers to pursue a certificate or a degree to advance their career. The Flex Graduate Loan is an option that can work regardless of the path the student takes to graduate school. So in order to be eligible, students must be enrolled in a graduate level degree or pursuing a graduate level certificate and attending at least half-time at an eligible not-for-profit school. For this loan, students can borrow for tuition, fees, living expenses, books, and supplies. So again, anything that falls under that cost of attendance for the student's program. This is also a school certified loan, so the financial aid office provides the final approval and the funds are dispersed directly to the school. And also the financial aid office would handle any sort of refund if you are receiving one. Students may borrow up to $50,000 annually or a total of $200,000 over the course of their studies under the Flex Graduate Loan. We also offer flexible repayment options for this program. So that means that we offer fixed rates and we have terms of 5, 10, and 15 years available. For this program, we offer deferred and immediate repayment plans. So that means students can choose to defer payments, full principal and interest while they're enrolled in school and through the 9-month grace period, or students can choose to enroll in immediate repayment. So immediate repayment of principal and interest, with the first payment being due 1 month after the loan or the first loan disbursement is processed. If you choose a repayment option with deferment, the grace period for the Flex Graduate Loan is 9 months.
All right, so there are some additional details that we want you to keep in mind, and they apply to all 3 loan programs that we just discussed. First and foremost, all three programs are credit-based, meaning there are underwriting requirements that must be met in order for the application to be approved and move forward. This also means that the interest rate an applicant receives is dependent upon their credit. So as Rafaela mentioned, with that in mind, both undergraduate and graduate students may find that applying with a credit-worthy cosigner improves your chances of approval and could also assist in receiving a lower interest rate. We currently offer fixed interest rates on all of our loan programs, which means the rate will remain the same throughout the life of the loan, as well as the monthly payment amount. And unlike some private and federal student loans, there are no application or origination fees charged. Another important detail to keep in mind for each of these programs is that the loan is dispersed directly to the school and is typically split in 2 equal disbursements, so fall and spring semester, unless the school directs us differently. And any refunds owed would be handled by the school's financial aid office as well. And then lastly, it's important to note that interest begins to accrue daily from the point of first disbursement. So if you have a deferred repayment loan or select that repayment option during the application process, please keep in mind that any unpaid interest will be added to the overall balance of your loan at the end of the grace period, which is also known as capitalization.
All right, repayment benefits. So HUECU offers a number of benefits available to our members in education loan repayment. The first two I'll discuss are interest rate reductions. So for our education loans, we offer a recurring payment discount, which is 0.25%. This discount can be applied after the loan has dispersed, and you can sign up to receive this discount when you sign up for the automatic recurring payment or when you enroll through our loan servicing partner, University Accounting Services. So this discount will be applied after you enroll in the automatic recurring payment. Another discount we offer is the qualifying relationship discount. This discount is also 0.25%, and a qualifying relationship with HUECU would be considered having an active checking account for at least 12 months or any secondary non-education loan product. This is also a discount that would be applied after the loan has dispersed, and in order to receive this, you can just reach out to our team directly to request the discount be applied to your dispersed loan. We also offer a cosigner release option. So this means for students or borrowers who would like to release their cosigner from any obligation to the loan. After the borrower has made 48 consecutive on-time loan payments, they're eligible to apply for cosigner release, and they can go through that process fully online from our website. Another benefit is that we don't have prepayment penalties on our education loans. So that means that students can pay their loan off in full at any time with no penalty. So if they receive a bonus or if they've just been making larger payments on their loans than the minimum balance, you can certainly pay your loan off at any time and there's no penalty in doing so. Finally, we offer forbearance and deferment benefits. So those with qualifying loans may be eligible to temporarily suspend or reduce loan payments through deferment or forbearance. And so we understand that repaying your education loans can be hard, especially if you're having difficulty either finding an employment or if you've experienced a job loss or have an unplanned medical expense. And additional information regarding our forbearance and deferment options are available on our website.
Awesome. Thank you so much. Now we're going to get into some member questions. First question is for Mel. Why would I borrow an HUECU loan versus a government subsidized loan?
So in general, some students or families choose to use private loans to fill the gap between their cost of attendance and other forms of financial aid. At HUECU, we offer competitive fixed rates on all of our products with multiple repayment term options and no origination fees or prepayment penalties, as you heard. And I also believe that a big benefit to borrowing with us is our personalized approach to helping members get through the application process, as well as assisting them with managing their repayment journey afterwards. And just some differences I'll highlight for comparison. For example, for our undergraduate loans, we offer, as Raf mentioned earlier, a cashback benefit for graduation, which isn't something you'll see with federal student loans. And as I mentioned, there are no origination fees charged on our education loans, which you will find with something like a Federal Plus loan, which may also have a higher rate in comparison to our parent loan. And then our Flex Grad loan can be used to fund certificate programs, which is not something that's typically covered under a federal student loan option. So those are just a few things to keep in mind when comparing the two.
Sounds like some great benefits on our loans. These are, in my opinion, community credit union loans sound like they're a lot better than the government, in my personal opinion.
I mean, I think the same.
Next question is for Raf. What graduate student loan opportunities are available for international students and Harvard alumni?
Yes, so for international and DACA students who are enrolled at least half-time in an eligible Harvard graduate degree program, they may be eligible for our Harvard graduate loan. And more details regarding the specific eligibility requirements for that loan can be found on our website. Also, international students who have a valid Social Security number may be eligible to apply for our career-specific loans, such as our BAR loan or our resident and fellow loan product. And then DACA students may be eligible to apply for our Flex graduate loan if they have a qualified US cosigner. So we do have a number of options available.
Wow, sounds great. Thank you. Next question. This is for Mel. Will the interest rate change in the future?
A good question. Unfortunately, we're not able to predict how rates will be impacted by the market in the future. As many of you may know, rates are at a historic high right now as the government is trying to combat inflation. And we do adjust our rates based on the market. However, rates will go back down at some point, which will result in ours decreasing as well. And as I mentioned earlier, HUECU does offer competitive fixed rates on all of our education loans. So selecting a fixed rate is an option to secure your rate for the term of your loan, since the rate will be fixed for the life of the loan and will not be impacted by market fluctuations.
It sounds like we have products to meet all of our member needs. I love that. Next question. How many times can I refinance my student loans? Raf?
Thanks, Terrence. So there is no limit to the number of times a borrower can refinance if they meet the underwriting criteria for the loan they're applying for. With that said, it's really important to consider that you may be paying more total interest if you're refinancing multiple times and extending your loan terms. So something to keep in mind. It's also important to consider the reason you are refinancing. To determine if there could be other options offered by your lender that would make more sense for what you're trying to accomplish if you're not just looking to reduce your rate. So some of those things could be a loan modification or also a cosigner release. A lot of people will refinance their loans with the idea that they're trying to release their cosigner from the loan. So some different options there as opposed to refinancing.
Beautiful. Next question. How can I get a graduate degree without borrowing a student loan? Mel?
So unfortunately, the reality is that most graduate students need to borrow some level of student loans. However, students can take advantage of other forms of financial aid, such as grants and scholarships, and also work either full-time or part-time, if able, while enrolled in school, to help with tuition costs and living expenses. And if you do have to borrow student loans, it's important to only borrow for the amount that is actually needed, in order to reduce the amount that will ultimately need to be repaid.
Sounds like good financial and budgeting advice, honestly. Next question. What are some helpful resources for graduate students? Raf?
Thanks. So there are a lot of resources available out there for graduate students. Your financial aid office is always a great resource for information relating to financial aid and scholarships. So you'll want to work with them directly if you're looking for information specific to those types of things. Your school will also be able to provide you with additional information on financial literacy. So that's a good place to start as well. Some resources that relate specifically to student aid and borrowing, specifically federal aid, would be the studentaid.gov website. There are many resources there available that relate to federal student loans, so I would encourage you to take a look there. For resources that relate to HUECU specifically, we have our HUECU education loan repayment page, which is a great resource for information related to an HUECU loan that you have, an education loan, and provides a lot of information about how to start and how you enter repayment and sign up for your University Accounting Services account, and also just information on making payments, postponing payments if that's something that you need to do, and applications and forms to complete for things like cosigner release and so on. So our education loans repayment page is a great resource. Also, HUECU has financial fitness information and also hosts webinars through our Thrive page. So that's huecu.org/thrive. And finally, Harvard offers financial fitness information and webinars through their student financial services site. So that's sfs.harvard.edu/financial fitness. And you don't have to worry about writing these all down because we can share them with you after the presentation.
Thank you. And Magdalia is putting the links in the chat. If anybody missed any of them, they will be right there available to you to click on and bring you right to our page. Next question. Thank you, Raf. Last question, actually. And if you have any other questions that you would like to ask during the presentation, please use the Q&A feature. We will be having some time set aside at the end to answer your questions live. So, will my current student loans affect my eligibility for other student loans? Mel?
So this depends on how your current student loans are impacting your credit profile. Since student loans are a type of debt, that means they impact your overall financial situation. So they can impact your debt to income ratio, your savings potential, as well as your credit score. So any adverse credit history may impact your ability to borrow a federal plus or private loan, since these types of loans typically require a credit check. Your credit can also impact other factors such as the amount of money and the interest rate offered if applying for like a private student loan. And in certain cases, a cosigner may be required. So if you are, or if you do, have student loan debt, consider making interest-only payments during your enrollment period, if able. These smaller payments will help allow you to avoid capitalization and reduce the total cost of your loan.
Good tips. Now we're going to be heading into our Q&A portion of the presentation. And I do see one question in the Q&A that came in from one of our members. First question, it can be for either of you. Is there a sense of when student loan rates will go down?
I don't mind taking this one, Rafaela. So, as I mentioned earlier, it's hard for us to predict what will happen with the rates right now. We can't really say when the rates will go down. It's just our expectation that they will eventually go down, which of course will end up impacting our any variable rate loans as well.
Awesome, thank you. Any other questions that you would like to answer? We have some time, about 7 minutes left in our presentation today. If not, I will move forward. You can read all this information and learn a bit more on our website at huecu.org/education loans. You'll see all of our products available, from resident loans to bar loans, and you can also read up a bit more to prepare as you start your educational journey. Oh, and I do see a question in the chat that came in. Both of you, can I refinance a loan from another provider with you?
I can take that one. Thanks, Terrence. So you can refinance from a different lender with HUECU. You would go through the process, through our online application process. We have an updated education refinance loan application, actually. So you'll actually be able to go through like a rate pre-qualification first to see what rates you may be eligible for, which is just a soft credit pull. It doesn't actually hurt your credit. So you can see what rates you may be eligible for if you're shopping around. And then if you decide to move forward with that offer, you can go through and submit a full application with us. And you would actually add your loan that you have or multiple loans within the application itself and submit the application, and from there just provide additional documentation. So that's the general application process if you'd like to refinance your loans from a different lender with us.
Awesome. One more question. For the variable rate loans, does the variable rate go up as well, or is it capped?
So right now, our loan products, we only offer fixed interest rates on all of our loan products. But in general, yes, if you have a variable rate loan, it is tied to the US prime rate. And so if there is an adjustment up, then your rate would adjust up. And if there's an adjustment down, your rate would adjust down.
Seems easy enough. Okay, let's move forward. Thank you. As I mentioned earlier, please visit huecu.org/education loans to learn a bit more. Also, we have a great referral program. Refer a new member, and when they join, you both earn $50. To learn more, go to huecu.org/referral. Next up, our last session in our Financial Scoop series. It'll be Wednesday, August 16th. It'll be estate planning with Jen Trio. Please stay tuned and visit huecu.org/financial scoop to learn more and register to participate. We also have a survey that'll be available after the session. Please let us know how we did. Let us know how we can increase our presentations to make it that much more valuable to you as our membership. Visit us at huecu.org/survey to take our survey. Also, full disclaimer, this presentation has been just a general overview and has been educational in nature. This is not investment advice, nor is it a recommendation to take one of our loan products and say you have to do it. By all means, take a product or choose a product that works best for you and your situation. And if you have any comments or concerns, please let's keep in touch. We are at MyHUECU on all social channels. And thank you for joining me today, Rafael Adawi and Mel Martinez. It's been a pleasure presenting with you and offering this valuable piece of information to our membership.
Thank you so much, Terrence. It was a pleasure to be here.
Thank you.
Thanks, everyone.